Hello, everybody, and welcome to the 85th edition of LM's Weekly Wrap, our weekly program for the market related developments covering the international markets, the domestic markets, as well as the sectoral developments. First of all, we start off with the global markets. I think the markets were looking forward to the US Federal Reserve Fed meet minutes, and I think the minutes were almost on the expected lines. The trends were similar to which we have seen in the past. Broadly, I think the Federal Reserve still remains a bit skeptical about the timing of the rate cut. What will be the extent of the rate cut? What will be the quantum of the rate cuts? The number of rate cuts which are expected in this year and going forward into the next few years. So I think this anxiety definitely had impacted the global markets initially, but I think markets slowly coming to terms with this, and the news flow has again moved towards the strong performance which we have seen by Nvidia yesterday. And this is an artificial intelligence firm, and it's posted a very strong set of numbers, a 264% rise in the net profit, something very humongous in terms of performance. And we've seen the Nasdaq move up by around 3% on account of this development. So a complete turnaround in operations as far as the global markets were concerned. And of course, Nasdaq moving up by 3% did have its positive impact on the domestic markets as well. So to sum up, the global scenario continues to favor, of course, domestic markets. And the domestic markets, what we are seeing is a picture perfect kind of a situation. It's a situation where valuations have been slowly moving up. We are seeing stock rotation happening in a very positive way. We are seeing different sectors outperform. We are seeing a lot of participation from many sectors, many companies which are participating in a very healthy and a constructive way in this bull run. A few sectors have taken a breather also, and that we see is as a positive sign, because when stocks run up quite a lot, it's essential that they take a breather and then before they begin the next leg of rally. So I think net to sum up, the domestic markets have been in great shape during the week, and straight away we'll go to the sectoral developments and what is the impact on the different companies. First of all, I think as we've been saying, auto sector, it is said that auto sector is the mother sector as far as any economy is concerned, because of the huge multiplier effect which we see on the different sectors of the economy, the kind of employment generation potential which it has got in an economy. And I think at this point in time, the auto sector has been doing exceptionally well. We've pointed out time and again that it's been a flawless performance as far as this sector is concerned. And during the week, we've seen good performances coming in from the likes of Tata Motors or Maruti or Mahindra and Mahindra. It's been a kind of a consistent performance from these players, but not only that, we've seen the smaller players now rise to the occasion. We've seen Force Motors perform exceptionally well. The stock price has performed very well. And today it was the turn of SML Isuzu. Today SML Isuzu hit the upper circuit, was up 20% in trade. So I think the smaller stocks are also trying to get their act together and making a comeback. A few sectors like tractors are struggling, but they are expected to make a comeback in the near future. So overall, auto continues to do very well, and the two-wheeler space, of course, it's been flying. Just to put things into perspective, we have Hero Motocorp stock, which has gone up by 70% in the last 6 months. We have Bajaj Auto, which has appreciated by 75% in the last 6 months. So it's been a dream ride as far as the auto sector is concerned. If auto does well, naturally auto ancillaries is expected to do well, and I think we've seen very good movement in auto related stocks, especially those which are catering to the EV segment. So Sona Comstar is there, or Suprajit is there, or Minda is there. We've seen very good performances coming in from the auto ancillary stocks also during the week. Next is banking. I think banking has been shown a divergent trend. We've seen PSUs banks do well, and I think SBI, Union Bank, etc. Are expected to do well. But the real problem lies in the private sector banks, where the FII holding is on the higher side. Now, as far as the market is concerned, we all know that the FII stance in the market has been that of seller. They've been persistent sellers in the market, and they're likely to remain sellers till the time we see that the 10-year benchmark bond yield is above 4%. So currently it's at around 4.3%. So FIIs continue their selling stance, and at the same time the DIIs have been on a buying spree. So they continue to buy aggressively in the markets. Now FIIs have big exposure to the banking sector and more so towards the private sector banks, and I think that is one of the reasons why what we are seeing. Private sector banks have been under pressure in the markets, especially HDFC Bank and to a certain extent Axis Bank, Kotak Mahindra Bank. But we've seen today good action in NBFCs, Geo Financial Services, I think moving up in trade and giving the investors a strong reason to smile in the market. So I think this was also our Diwali pick, which we had identified at 217 levels, continues to do very well in trade. And has been a stock which really shown in trade today. Next is capital goods space. I think capital goods continues to do very well on the back of strong orders. The star of this week inevitably will be ABB, Asher Brown Boveri. The stock went up by 10% and then 9% in trade yesterday. So very strong performances over there, and then we saw strong action in counters like Cummins, Thermax, etc. They have also done quite well in trade. So overall capital goods space continues to do quite well. In the capital goods space, we at LM have exposure to certain stocks which we have identified at very early stage. We like Elecon Engineering, we like Action Construction Equipment, Triveni Turbine, HBL Power Systems. These are some of the stocks we like, and as well as Schneider Electric. So I think these stocks, again, the potential remains very strong as far as they are concerned. Next we come to FMCG. I think FMCG sector is one sector which continues to be under a lot of pressure, and volume growth has been disappointing. Rural markets have still not recovered. So I think there the pain point continues. IT continues to be under pressure, and I think the large cap IT stocks have been giving up their gains, but I think mid cap IT stocks could see some recovery and momentum going forward into the markets. Pharma continues to do very well in trade, and I think a lot of pharma companies have been buzzing around in trade on expectation that the best is yet to come, of course, as far as the pharma sector is concerned. Realty sector, again, we are seeing good amount of consolidation. Every time we see the realty sector goes on to make new highs, consolidates, and then tends to move higher. So the stance which we have maintained is that the best of real estate is yet to come as far as the markets are concerned, and I think markets have been proving that time and again. And I think apart from this, we have the PSU refiners. After having had a dream run, we've seen some correction in the PSU refining space. And I think this type of correction is healthy as far as the markets are concerned, and this healthy correction will only make the momentum positive going forward. So PSUs have been taking a breather in the market. We've seen railway related stocks also taking a breather in the market. But if we were to give our opinion, then I think power sector is a sector to watch out for in the near future. This is because there's going to be an exponential demand for power in the near future, because till now we've had vehicles which are running on petrol, diesel, etc. But the new age vehicles are going to run on electric. So that's going to increase the demand for power. At the same time, we're all using mobile phones. when we are using mobile phones, so much use of mobile phones, so much use of data, there's going to be an exponential surge in the demand for data centers, and data centers require huge amount of power, so there's going to be huge demand for data centers also. Likewise, even if we take industrial metals like say steel. Steel traditionally has been made through the blast furnace route, but now it is going to be made by the electric arc furnace route. That again uses a lot of power. So there are numerous such examples which I can share with you, but time constraints. So I think power is going to be the sector to watch out for. There's going to be huge amount of demand for renewable energy as well as coal-based power. So I think that is the sector to watch out for. And in the power space, T&D especially is going to be the space to watch out for. That is transmission and distribution, where we have transformers, where we have smart meters, etc. So more of that we'll keep it for some other time. And finally, the entry of Grasim into the paints business. I think they made a big splash with the launch of Birla Opus, and there are a lot of opinions and views whether Asian Paints will be impacted by this, what will be the extent, and different experts have their different views. Some people feel it may not be impacted, some people feel that it will just help them to get their act together. So I think we'll discuss this also for some other time. We hope you liked our program. Kindly revert back to us with your feedback on our program. Thank you everybody for a patient hearing.